Hello everybody. Today we will do fundamental analysis of the Facebook company, one of the biggest tech companies in the world, member of the famous FANG and huge social media conglomerate. As you probably know, as you can see on this chart, Facebook owns several applications amongst top 10 in the world with most downloads, such as Facebook, WhatsApp, Messenger and Instagram. Few years ago, Facebook also bought Oculus, that is company which is producing VR headset, but it is not very significant part of the company, so we will not focus too much on it. Another few interesting things that Facebook is developing are Facebook Marketplace, Libra, its cryptocurrency, which is stopped by the governments, and it's recently announced that it will launch soon a TikTok competitor. And as you know, TikTok is a huge application and extremely popular with younger population. But recently some of the countries have decided to ban TikTok or are starting some kind of investigations. So that is huge headwind for TikTok, and Facebook is obviously seeing some opportunities for itself, so it is launching its competitor. But it is yet to be seen with these new initiatives how good results are they going to achieve. So let's start from monthly active users. As you can see on this chart, Facebook is maturing and they are growing their monthly active users with the slow pace, which is expected from company this size and from company which is relatively old when you are speaking about tech giants. But as you can see, numbers are growing steadily and it is a really nice chart to see. If you see this bottom dark gray area, it is US and Canada. You can see, and above it is Europe. Those places are where their most valuable users are in terms of ad revenue, and number of those users is growing in single digit numbers, low single digits, and the rest of the world is still growing in double digit rate. I expect these numbers to continue growing 5 to 10% in the next 2 years. Now we are coming to the revenue numbers. This is a very beautiful chart. You can see almost perfect trend of year-over-year double-digit revenue growth. This is how chart of the growth company looks like. Of course, every time after Q4 we see a little bit fall in the revenue numbers, but that is completely normal. In Q4 we have Black Friday, we have Christmas, we have Cyber Monday, and we have basically shopping spree. So after that finishes in first 3 months of the new year, we always have a little bit of slowdown in ad spending. But the trend is obvious, it is growing steadily and it is really beautiful. If we check first quarter of 2019 and compare it to first quarter of this year, we see almost 20% growth in revenue numbers. But if we check first quarter of 2019 and compare it to first quarter of 2018, we see that revenue growth is slowing down a little bit. So last year we've had over 20% of revenue growth. This year we are at between 15 and 20% at this moment based on the numbers in last quarter. We will soon have report of the second quarter. We will see how they performed in this coronavirus quarter. But based on these previous numbers and past data, this is perfect chart of the growth company. Now we are moving to operating margins chart. And unfortunately, as you can see here, Facebook is in the downtrend. That is a chart that nobody likes to see in the company that person is investing in. So we can exclude quarter 1 and 2 2019 because they had one-time legal expenses. But if we pull the line from first quarter of 2018 and first quarter of 2020, you can see clear downtrend in operating margins of the Facebook. I will explain later why is this happening and do I think if this trend is continue or have we bottomed down in operating margins. If you check the net income, first of the things that I would like to emphasize here is if you check results in first quarter of 2018 and first quarter of 2020, you can see that basically net income didn't change at all. Facebook earned almost $5 billion 2 years ago, first quarter, as well as first quarter of this year. But if we go back to the revenue numbers, you can see that in the first quarter of 2018, Facebook had only $12 billion of US dollars of revenue, and this year Facebook had more than 17 billions. So you can clearly see that something is happening under the hood of the Facebook, and it is not good for the shareholders. So going back to the net income chart, also if we place in the first quarter of 2019 those 3 billions that Facebook had in legal expenses, we can see that this year in first quarter net income actually declined. So Facebook went from 5.4 billion US dollars in net income to 4.9 billion, almost 10% of decline in net income. This is worrisome trend and clearly something that nobody would like to see in the company that he is investing. But this is still extremely healthy company. As you can see, earning $5 billion of net income per quarter is something that only few companies in the world can do. So why are Facebook's margins shrinking? Well, Facebook has been under huge criticism in the last several years. So from the public and its users to governments and all kinds of organizations. I couldn't even count how many times Facebook management had to go to the Senate intelligence hearings. And that is only issues in the US. EU is also trying to protect private data, and recently we got the GDPR, and now also France, Germany, Austria and some other countries are introducing a digital tax, which will most likely tax revenue from tech giants. Of course, some countries in the EU are against that tax, but ideas about taxing US tech giants in Europe will not disappear so easily. And so Facebook consequently, in order to survive and in order to prove its willingness to block hate speech and some other violent content from its platforms, had to hire thousands and thousands of employees. So consequently, of course, its capital expenditures exploded. We can check this Facebook's press release, for example, that says that Facebook will help to protect the 2020 US elections. Imagine just how sensitive this topic is and how much of the money, time and employees will Facebook have to invest in order to not be accused that it interfered in the US elections. Facebook plans to fight foreign interference, increase transparency, reduce misinformation. That is only US elections. So this chart where you can see number of Facebook's employees is not surprising thing to say. In the early years, to see this kind of increase in employee numbers wasn't something special because the revenue of the Facebook was growing in triple digits, then 50, 60, 70% per year. So to increase number of employees 50% when your revenue is growing 50% or more wasn't anything special, and profit margins of the Facebook stayed the same. But in recent years, as we've seen in previous charts, revenue of the Facebook has slowed down significantly. First from 40 to 30, then from 30 to 20, and now even under 20% of revenue growth. But the growth in number of employees in the Facebook didn't slow down as much as revenue did, and it was growing faster than the revenue, so consequently margins went down, because expenses for the employees are the biggest expense for the Facebook. So now we are coming to the valuation. As you can see on this small chart, Facebook stock in the last few months went from $150 to almost $250. In period where they are having huge issues with margins, with coronavirus, which will of course impact huge ad revenue, ad spending. And forward PE of the Facebook at this moment is 33, which means that projected profits for the next 12 months will be at around $8. Of course, Facebook has one of the best balance sheets in the world. Facebook has zero debt and around $60 billion of cash. So you have to take that into consideration, but our market cap of almost 700 billion, that is not so impactful. It is significant, but not so impactful. So I personally, at this moment, at this price, rate Facebook as a sell. So in order for me to buy the Facebook, its stock price should go down to at least 200 or 180 bucks, because I think this year for Facebook results will be extremely volatile and extremely challenging year. I think that investors are expecting too much from the Facebook as, I guess, corona-proof company, because it depends on the economy, it depends on the ad spending, and I also do not expect Facebook's margins to go down from these levels. I think they have bottomed down, but I do not expect them to grow in the near future either. So thank you again for watching my video. Hopefully you have gained some new information and gained some value from it. And of course, this is only my opinion. You have to do your own homework and do your own analysis and make your own decision about buying or not Facebook stock.